Hey everybody, and welcome back. So with the recent stock market sell-off, particularly in some of our high growth, fast growth tech type names, it's provided another unique window of opportunity to capitalize on. So today we're going to talk about the dip in Applied Digital, and it's back to about $8 a share right now, which to me is a fantastic entry point in a company that is everything high performance computing for the future. Again, they are the operator, developer, designer of high performance computing and traditional computing data centers, doing data center hosting, offering cloud services, and the like. And they do it rather uniquely because their data centers are in places where they have a very close proximity to energy production. So they've got great contracts in place so they can actually handle the energy needs to run these high data center or high performance computing centers. That makes them exciting. It makes them indispensable in the future for data centers. Again, they changed since we talked about them last. Well, besides they've shored up their financing even more. They've partnered with Macquarie. They've raised lots of money. This company has been on an explosive tear for years now, and that's going to continue for a while to come. There's a lot to be built out. There's a lot of demand. And I guess speaking of demand, they've already indicated that their demand is basically sold out for the rest of 2025. So this is all music to us as being investors' ears. Another big catalyst they have is Applied is coming out with their earnings on July 14th. Now, for this company, they've had fantastic ramp up in revenue growth, and this quarter should be no different. They're expecting revenue growth in excess of 50%, and this is really should be music to all of our ears to be involved with a company at such an attractive entry point with fantastic revenue growth. So exciting news coming with that. Again, they've partnered with Macquarie to refinance a credit facility at attractive rates. They have ample liquidity to continue the growth trajectory that we've become accustomed to for Applied Digital. But the stock price has lagged on this company. It's been a challenging market, especially for certain names. And this one, I think, is ready to break out in a nice upward fashion. I guess what doesn't hurt here either is that our favorite chip producer, one of them, NVIDIA, I think I got that name right this time, has a 3% stake, and analysts are targeting Applied Digital to have a stock price of $11 to $15 a share. So you've got fantastic backing, you've got good numbers, you've got revenue that are expected to ramp up pretty nicely. Overall, Applied Digital looks to have a great entry point right here at $8 a share. And I've increased my stake recently in Applied Digital, and you might want to take a look at it for yours as well. Again, we've got earnings coming out right after the New Year's, early into the New Year's. They've now electrified their Ellendale, Dakota's high performance computing center, which means they can have a rapid build out and add to revenue growth. And they've shored up anything they needed to with their finances to continue this explosive growth. So at $8 a share, Applied Digital looks to be the place to be. It's got a low market cap, good float, and great revenue projections. So I'm pretty excited about Applied Digital and wanted to share that with everybody, as this could be a great investment, not only near term, but long term. Hope that helps. Drop me your comments, your thoughts. If you're investing in Applied Digital, or if you want to know any more details, we can talk about it here. We'll see you.